Hi, let's talk about Bitcoin. I think now nobody is disputing that getting to 100K by end of the year is quite a bit of a stretch. A lot of people are predicting 100K, maybe even 200K by end of the year. And this is how that would look like. So Bitcoin would have to go pretty much straight up from here, which did happen in the past occasionally. But more often than not, the rallies, they are much less steep. So it's not impossible, but I would definitely not bet the farm on this, especially given that recently momentum isn't too bullish, right? We reached an all-time high on 8th of November, but since then went down 15%. And that's not necessarily common throughout the entire history of Bitcoin. Usually what happens is when we do reach a new all-time high after an extended sideways period, we tend to rally. But Bitcoin seems to somewhat slow down now, right? When we now reach all-time highs, these are rather profit-taking opportunities. People tend to sell whenever Bitcoin is pretty high. And so this sideways trading range, which we've been in for the entire year, it seems to somewhat stay intact. Now, in case we don't rise like this, right, which I think is quite likely actually, how far could we potentially fall in the very grand scheme of things? If we look at the all-time history of Bitcoin, more than 10 years of price data, how low could we potentially fall? One thing to look at is the 4-year moving average. So the 208-week moving average, that has been historically a very nice support line. We've never closed a week below that, and that might be related to the halvening, right? Bitcoin's new supply gets cut in half every 4 years, and so we tend to have these cycles. We tend to get a boom and a bust, and another boom and another bust. And some people think these cycles, they tend to lengthen. Others propose that the cycle is still somewhat connected to the halvening cycle. And so when you just look at what has historically been a pretty good floor, let's just try to arbitrarily extend this moving average to get an idea where we potentially could fall to. So let's just draw something like this, change the color to red, and let's zoom in a little. And so let's just play with this. Let's say the 4-year moving average continues to be a floor. And let's also assume we crash relatively quickly. We could potentially, in the worst case scenario, go to somewhere around 24K. That's at least historically speaking, not completely off the table. But that of course depends if we do crash and also how quick that would happen. If the decline is more modest and more slow, maybe the bottom in a year or so could be at around 28, 29K. So this is the range you're playing with here. What I also think is important to notice is that Bitcoin is maturing, right? The volatility that we had in the early days when Bitcoin was just in the few cents and dollars, that kind of volatility is very different to what we now experience. It takes way more money to move the market in percentage terms. And so we can't really compare those movements. There is some kind of a change over time. And so maybe it's not really reasonable to assume that we will get again such a parabolic rally. One way to look at these rallies, for example, is to measure the distance from this absolute floor, from that 4-year moving average to the price. And that's this line over here. And so the question really is, does it make sense to assume that the next top, the next market cycle top, where we afterwards might again go into a crypto winter, right? Where we drop, say, 84% or so. Does it make sense that that top will again be such an incredible extension from this absolute floor? And I think it's probably unlikely. I think these extensions with each market cycle are likely going to decline. So the bull markets, they become more moderate. Now, why do I say this? Let's look at the shorter moving average extension. Let's look at the half-year moving average extension. And what we can see here is already such a development. We can already see the early market cycle tops, they had been extended from this half-year moving average. Let's maybe draw that moving average. So we are looking at 26 weeks. We see that those extensions, they have been way higher in the past. And with each top, with each bull run, this extension tended to decline. So we are seeing something like this, right? It's not a clear line, but it's a tendency. And I wouldn't be surprised if this trend tends to continue. So at some point, the volatility of Bitcoin will be really low. People that want to own Bitcoin already bought it. And so the growth doesn't come that much anymore from user adoption, but it mainly comes from external factors, right? Money printing, economic cycles, interest rates, the dollar strength, whatever it might be. It might not be so much anymore related to adoption. And so with that, the price changes, they might also calm down. Or in other words, the extensions, the hype phases, they might be way more muted. It might not be possible, in fact, to clearly point out those cycles anymore because these rallies, they are simply so small, comparatively speaking. Now, the 4-year moving average is one way to find a bottom. What I also find interesting is to look at this recent peak, right? The peak here in April looks quite different to what we have seen in December 2017, right? In December 2017, we shot up and we directly came down. That's pretty different to the peak early in this year. We shot up and we stayed up for quite a while. And then we just consolidated a little bit. I mean, a little bit in crypto still means almost 50% down, but it's still way less than what we have seen in 2018. Now, this peak might be somewhat comparable to what we've seen in the middle of 2019. So let's just draw this parallel. Let's overlay these chart patterns, assume that this little bump over here relates to this little bump, and let's look at what potentially could happen. So we've got this pattern over here and we overlay this, and this is what we are playing with. So I find this interesting, right? The crash here in Q1 2000, which led us to this bottom, has pretty much the same magnitude as a crash would have if we were to fall now. I mean, we're already somewhat beyond this, right? So this is obviously no exact science, but I find the similarities still interesting. So this is the kind of magnitudes you're playing with. You really should set yourself up that you wouldn't be completely crushed in case we do have quite a bit of a correction. So don't be 100% in altcoins and lose way more in case we go down, right? Altcoins, they move more than the general crypto market. If Bitcoin goes down, say 5%, a small altcoin might go down by 10%. So when Bitcoin goes down by 60%, the alts, they might lose, say, 80 or 90%. So don't have all your money in altcoins because simply in case this does happen, you don't have any firepower to reload again, right? And then to take advantage of the next big rally. So manage your risk accordingly. Be sure that you're prepared for whatever happens. In case we do go up, nice, we make money. But in case we go down, have enough liquidity to buy the dip. And buying the dip really means that we come down quite a bit, right? I wouldn't completely go in simply because we fall, say, to 35K or so. We might fall further than that. At least historically, that's what tended to happen. Now, in case a crash does come, when could it come? Of course, I don't have a crystal ball either, but what's interesting to look at is the performance per month of the year for Bitcoin. So Q4 tends to be comparatively bullish for crypto. January, February seems to be fine as well. But these are averages, right? And there are obviously outliers. Right now, this November, we are not that bullish. But say this pattern would somewhat repeat itself, March could potentially be a dangerous time. At least that's where Bitcoin didn't make a lot of gains in the past. So that would be somewhere around here. So who knows how this plays out, right? But let's just guess a little bit over here. Maybe we go sideways until March and then maybe in March we tend to decline. So again, simply just look at the 4-year moving average. This doesn't have to hold, right? Nobody knows if this support line will work forever. That would basically mean that if you held Bitcoin for 4 years, you could never be in the negatives, right? This was what happened in the past. But given that returns tend to slow down, given that a lot of adoption has already happened, at least in the short term, maybe we could even break this support line to a certain degree. But I still think there's quite a bit of validity to this. If we do fall that much, I think there will be quite a few buyers that are willing to pick up those Bitcoin. But right now, the excitement is kind of muted, right? People hope for the 100K, but there don't seem to be enough buyers right now. Maybe we simply have to come down a little bit to reignite some of that excitement. I've got an announcement to make. I just launched the premium membership of Bitcoin Strategy. You can find this at this URL or the link in the video description. There's interesting premium content, so tutorials, how to make technical analysis, exclusive market updates, mindset videos. There's also a premium Telegram group where you can ask me any questions, an alert channel for indicator alerts. So I think there's quite a bit of value here. Feel free to check that out. It's just launching today, the Bitcoin Strategy Premium membership. If you got value out of this video, please give this a thumbs up. YouTube will then help to grow the channel. And if you haven't yet, feel free to subscribe as well. I publish videos regularly. Last but not least, if you're not yet ready for the premium membership, we've also got a public channel. That's the Bitcoin Strategy channel. You can find us simply by searching for Bitcoin Strategy channel within the Telegram app. See you next time. Bye-bye.